Good morning, everyone. Happy Wednesday. Welcome to your morning BTC analysis. All right. So, folks, again, in our free side, I do put up videos sometimes like you're watching right now on YouTube. However, the Advantage members, obviously because they pay, they get 2 videos a day. All right. And on top of that, they get multiple analyses through the day, exactly what I'm looking at. And then, of course, our leverage trading channels right here, shorts and longs, scalp trades that we take through the day. We have swing trading opportunities. I actually just put out a trade here in the short term yesterday and over the past few days. So, tons of information and education in our community. And over here, actually, we have the big education channel where there's a ton of information in here that I like to share, my trading philosophy, some Elliott Wave guides, who you can refer to for taxing and accounting, how to stay calm and cool and collected while trading, how to manage your risk, all kinds of really interesting stuff in here for you guys to look at, because at the end of the day, if you're not here to learn, if you're not here to educate yourself, you're basically someone who's trying to follow signals from someone else. Okay, and that's not me. Okay, I don't want that to be anyone for you. What you really need to do is look at my analysis, weigh that against your own bias, your own knowledge, and say, does this make sense? And if it makes sense, you pull the trigger. If it doesn't, don't pull the trigger, right? Because at the end of the day, everything in life is ultimately up to you. You always have options, you always have choices. You have good choices and bad choices, okay? Same with trading. You have good choices in trading and bad choices in trading. You have FOMO trading and panic selling, So we try to help you with your mental fortitude in these markets, right? If I can't put out a good trade, or if I don't see a good trade in the market, at least I'll stop you from making a bad trade. I'll stop you from making bad decisions. I'll stop you from setting bad stop losses, or hoping that this thing is gonna keep flying, or whatever crypto coin that you bought, you think it's gonna go higher and higher. And I'll at least let you know that, hey, it might be time to take profit. Okay, it's not really financial advice, but it's the best kind of opinion that I can give you, because at the end of the day, these markets are nothing but a game of psychology. It's a game of the mind. Okay, and once you start realizing that the game of the mind, then you realize, oh wow, okay, then it makes sense to you. And once it makes sense to you, you realize that it's not about how high or how low prices can go. It's about where exactly do the technicals line up. And all these candles, again, as I've said, represent a buyer and a seller, someone who is FOMOing into the market versus someone who is properly selling, or properly buying, right? And once you understand the psychology of these candles and exactly where the pain lies and where the potential good trades lie, right, based on non-emotional bias, then you realize how to make good trades. Okay, so this is probably one of the most important things that no one really teaches you in this market. Everyone is just talking about technicals, but though technicals are very important, beyond that, what's really important is the psychology behind trading, right? The psychology behind technical analysis, because technicals don't really make sense unless you understand them in the context of the human mind. And once you start realizing, exactly how people are displaced in one trade or another, or pushed away from one side to another, stopped out, or FOMO'd into a trade, or sold too early or sold too late, you won't understand why technicals make sense. And once that resonates with you as a person, as a trader, as an investor, how there's emotions trapped in one side or the other, then you realize the game is very clear, right? The rules are set. You know what to make for a move next. Okay. All right. Enough about that. Today's analysis is mostly going to be focused on raw price action. I really just wanted to show y'all again. We've come to this point at the monthly open, and we're just not able to break through it. So all this happened yesterday in the last, I think 12, 16 hours or so. So this sell-off right here triggered right at the rejection of the monthly open, which is also where this support was. A really fantastic way of getting short. I actually had a short, but I had placed my stop like right around 83.25 or something, or 83.50, and I got stopped out, and it was tough to swallow. But then, after that, I figured, all right, this thing, I'm just gonna have to wait it out. Okay, I don't know how long it's gonna bleed or where it's gonna bleed, but at some point it's gonna stop, and then it's gonna give me a better opportunity, right? So hopefully this thing pulls back up and gives me a better opportunity. Or, if I start seeing 4-hour candles close under this blue marker, then I will probably have to get into a short a little bit later, right? And the reason I say that blue marker is because that comes from over here, okay? So if we look over here, you can see all these wicks poke into that area, right? That blue marker, resistance, resistance, resistance. This is a fake out, garbage, pulls back, resistance, and then it rips through, right? Then it catches support right here, stops out those people, tries to push under this area, but the buyers from here, more than likely, are the ones defending this position right now. Okay, so that means that a close under this blue marker on a 4-hour time frame would imply that these buyers are now getting shaky. They're not able to push this price higher. What's really happening is they're struggling to push it higher, and more than likely it's just going to kind of go like that. Okay, so then I will again get a short opportunity right there, right? So, people always ask me, like, how often do you take a trade, or, do you trade pretty much every day? Well, no, not really, okay? And just because this market is open 24/7 doesn't mean you have to trade it 24/7. It just means that you need to spend more time doing the research, doing the setups, doing your analysis, and then figuring out what's a good place for a setup for a long or short. Start laying out technicals on your chart. Start laying out, horizontal lines, monthly opens, weekly opens, support and resistance levels. Where are potential areas for stops, right? Where are the people going to feel the most pain? Okay, and over here, I'd stated in my video yesterday, right? The pain sat over here when there was probably, stops sitting in this area right here for shorts, right? And all these people who shorted here, right, when the prices started to push up like this, okay, these people started to go in the negative. And then these people who had the shorts up in this region, they got stopped out. Whoever had the short stops up in this region, they got stopped out because more than likely this price pushed up. And then over here in this region as well, as you can see, you probably have some stops for the short sitting right there. So all those people more than likely got stopped out, and then price reversed on its way down. And now I'm thinking that where else does the pain lie? Well, there's a couple different areas, all right? First things first, there's probably stops sitting way up here, okay? But that is very hard to do, okay? Breaking above the monthly open to push prices up all the way, that's going to be really hard. All right, that's going to require a lot of buying, a lot of pressure to push the prices up, and I really don't think the bulls have that just yet. All right, and then over here, there's probably some stops sitting above this area, which is about 84.40 or so. Okay, I really don't think price is going to make it all the way up there. Personally, I think the max it'll make it is probably, right there, maybe $8,200 max. Okay. More likely what price could do is just go up here, 8,100, and then push back down. Okay, so that's my thought process. All right. On the 4-hour chart, you can make the argument that I'm going to pull this volume off. By the way, just to real quick mention things about the volume. Volume started to pick up on the last 4 hours of selling, or I'm sorry, the last 16 hours on the 4-hour time frame of selling right there. You can see, right? And not a whole lot of buying is coming in, at least not yet. Okay, so unless we start seeing the volume pick up on buying, I'm kind of not going to believe that this is a good rally. And more importantly, every bounce, right, that we've had so far like this gets sold off in less than 24 hours or 48 hours. Like this thing right here went up for a day, moved sideways for a day and a half, boom, got sold off. Okay, so the point is that this entire range it's been far more lucrative, at least for me, to find shorting opportunities. It's, to be honest, it's been really hard for me to find long opportunities. I'm just not doing well in the longs right now, just because, you know, I really don't know when this thing is going to bounce, because this market is so illiquid that there's really no spot buying happening. All I have to do is wait for, you know, the pain or people to essentially get lopsided on one side of the trade or the other, and then the market just randomly pushes up. And these movements right here, they happen in less than 5-10 minutes sometimes, you know, and I'm not available all the time to trade that movement, right? And I also don't know when, you know, this kind of movement right here is just going to break down. So my risk and reward for longs is a bit tougher to identify. However, for my shorts, it's very easy and predictable. So I've been very successful in shorting, not so successful in longing. All right. With that being said, okay, now I'm going to draw a parallel channel. I'm going to draw it two different ways. Okay, so there's a couple different ways to look at this. All right, I'm going to draw it like that. Okay, so we're going to look at that way. All right, so in this particular case, right, I want to show you guys this. You can see that, you know, this line touches right there. I'm going to pull this down just a little bit more. So touch at the top, touch at the bottom, bottom, top, right? So you can see right here that this is a pretty decent parallel channel. Okay, now we're bouncing right off the EQ of this channel right here. Okay, so pretty decent sign, right? Now there's another way to draw this parallel channel. Okay, and the reason why I like it this way, and I'll tell you in a second, all right, is because I really didn't like this wick. This is really a hunting wick, and I don't really care much for it. Okay, this happened in like 2 minutes, I remember, right? This happened like overnight during the US time zone, and it just honestly happened like less than like 2 or 3 minutes. So I'm not really too fond of that, but what I am fond of is, you know, this movement right here. And this is interesting because this gives a better identifying structure for this parallel channel. This is really interesting because it goes like this: bottom, top, bottom, top. So now you have 4 touches instead of the 3 that I showed you in the previous channel. And now you can see price here in this case is struggling to break above the EQ of this channel. Okay, and the EQ of this channel actually lines up a lot better than the previous channel, because you could see bounce right here, breaks through, or actually it doesn't even, so bounces, rejects it, rejects the EQ, breaks through, rejects the EQ, breaks through, rejects the EQ again, comes down again, boom, comes back, and now it's, you know, essentially finding support right at the EQ or getting rejected by the EQ. It's very tight, so I can't really tell, but this is a good parallel channel that I like. Okay, now on top of that, you know, I like to watch the volume profile, right? Okay, so I'm gonna turn off this drawing tool stuff. You could see that this red line, okay, right here, this is known as the point of control. I don't know why it keeps going down, that's weird. Okay, there it is. It's right around $8,200, and you can see that's right at the base of where this candle found a bounce right here and then pushed back up for, you know, another potential movement into the $8,300 area. This point of control is very critical. Okay, so price could make it back up to that $8,200 marker, which is the point of control, and still push back down, kind of like it did over here, right? So notice that the height of this candle kind of touched the bottom of the wick of this, which is the support that helped us, you know, bounce from here, push back up. So even if we counted that in the same manner, right? So that would be right around 8150. Okay, 8150 would be the area to watch. Okay, let's see. Let me see if there's another chart that I could illustrate this a little bit better. Okay, so let's see. Okay, I'm gonna turn this off, the volume profile, and remember, like I said earlier, you know, the $8,200 area, that's the area to watch, right? Here's another way to look at this. Remember, in my previous videos, again, I know I keep saying in my previous videos, I hope you guys do watch my videos. You know, take the time to do these videos for y'all, because I want to, give as much, free education, free content as I can, but a lot of my time does go to the Advantage community, right? We have a ton of conversation through the day. I'm pretty much here and available like for 12, 16 hours of the day. And I really like trading with my community, talking to them, and I call them community and not just, a Discord channel, because it truly is a community, right? Like a lot of us know each other, at least by first name, at least privately I do, we have conversations aside from crypto. We have families, we have other things to look forward to in life, and there's a reason why people are in this market. It's not just because people are just gambling like degenerates. It's because they're trying to learn something. They're trying to gain a new skill set. They're trying to pay off a vacation, pay for their daughter's education, or pay for, college for themselves, or have some free income. And I hope I can provide you enough education for you to be able to do that. Okay. So I make these free videos as much as I can, at least, right, for the general public, and hope that you come and join our community. Okay. Most people think that paid groups are a scam, and they're people are just willing to tell you to buy this and that. That's really not how our community works. I mean, we were built on a pretty strong foundation. Our gains reviews go back all the way to early bear market 2018 and 2017. Okay, we moved from Slack to Discord. A lot of these members have migrated from Slack to Discord, so our retention rate for our community members is very high, right? Because we have members who have been with us for a good 2 years, 2.5 years. Okay, so as you can see, this dates back to 2019 and 2018 and way before that too, right? Way over there. You can see, let's see, I wish these had dates on them. But anyway, this goes back, all the way into the bear market of the 2018 days, right? So the point is that, in our community, we're not just about, kind of telling you like buy this or buy that. First of all, I think that's dumb, and you're never going to learn anything. It's the whole analogy of, give a man a fish versus teaching a man to fish, right? Man or woman, by the way. So, hopefully I'm teaching you guys how to fish, right? That's the kind of person that I want to be. All right. I want to teach you how to fish. All right. So speaking of teaching you how to fish, okay. So remember that I mentioned this bearish structure. These are called bearish rectangles. The reason why they're called bearish rectangles is because in a range, in a defined range, this whole time there was actually distribution happening. If you don't know what distribution is, it's a very simple term that institutions or professionals use, large funds use, to be able to take a long period of time in a range to be able to sell off their asset. And remember that professional money, smart money, doesn't have 5 Bitcoin like you and I do. They have maybe 5,000 or 50,000. And so to unload that, right, they can't just sell it all at once. That's going to tank the market, $3,000 or something in less than an hour. So what they want to do is define a range, right? They want to define a range where other people, other not as smart professionals or retailers get caught in this range, and they buy the asset off the smart money at this defined price. Because remember, it's better for them to sell between a range of 9,000 and 11,000 than it is to sell them all at once, catch a slippage on the selling, right? And by the time all their product is gone, they're now averaging 8,500, maybe 7,500, right? So they basically lost a ton of money on that. So when you define a range like this and distribution is happening, you know that your returns for your profits are in a defined, margin. It's between 11,000 at height and 9,000 at the base, right? So this was all distribution that was happening, okay? Now here's what's happening over here, which is also similar. Now note the red marker at the top, which is around 10.9, the yellow marker back here in August, which is around 10,400, okay? Same thing, same sort of distribution is happening right here. And not that I ever say that I'm 100% confident, not that anyone ever should, but I am more confident that this is distribution, at least 75% confident that this is distribution, almost analogous to this, because even the structures are so similar, right? I want you to look at this, okay? So take a look at this and see range right there, top, bottom, breaks above, deviation right there, breaks back under the range, top, and then it defines a different range in the middle of this larger range, which is this yellow block, right? So you can see that right there. You know, this was the deviation right there, right? This is the last touch that, you know, we were going to get, or maybe it's this one, you know, we might be over here. And now we're now doing this. After that last touch at 10,900, which is for us right here, we're now under this yellow block, because now price from here can't even get up to 10,900. It's just kind of struggling and meandering between this area right here, gets rejected by the yellow block, and then just sells off. Okay, so where does that, if we're defining that price is around that yellow block for us right now, because we believe that this is a bearish rectangle, right? That yellow block comes out to this area, about 10,200 to about 10,250, which again is very close to that monthly open and also near the weekly open. Okay, I don't know where that chart went, but anyway, the weekly open is somewhere around like 82.50 or something, 82.60 maybe, and the monthly open is $8,300. Okay, so this yellow block comes pretty close to that strip, right? So price can still make it back up to this yellow strip and then come back again and then sell off. Okay, so point is that this is why I'm not worried for shorts, and this is why I'm rarely worried for missing positions and missing opportunities for shorts or longs, because there will probably more than likely be another opportunity that comes along not too long after. Okay, but forcing yourself into a trade, into shorting support, is probably not the best, you know, way to go about it. Even if you're right, it didn't mean that you were right because of the technicals. It meant right because you were lucky. You know, you don't want to get lucky, or you don't want to trade based off luck, because luck runs out. Technicals, understanding technicals never runs out, because that's all based on, you know, defining risk, understanding what's a good trade and what's not. Okay. I've also drawn this line like this trend line, right? Kind of like this. And you could see that here's another reason why I'm a bit more bearish, right? So first touch right there, second touch. Now we know that this trend line is sort of real, okay? Third touch right there. Now we know definitely this trend line is real, okay? So remember, 2 touches give somewhat of validation to the trend line. 3, and it's confirmed. Fourth touch right there, oh, you know, we definitely know it's confirmed now. Pushes back up into that monthly open and the weekly open, sells off, comes back to that same trend line and bounces off that. And now we need to see if we're going to get a higher high from this bounce, which is unlikely in my opinion, or if we're going to go up like this, hit this yellow block, and then pull back down. And I'm more confident that if we go up like this, right, from here, and we go like this and like that again, more than likely next time we come around to this trend line is going to break. Not only is that trend line going to break, I can say it with higher confidence that this, you know, garbage right here that's going on, where the bulls are doing their best to not get slaughtered down here, this is going to rip too. Okay, and then that defines our next area of support. First thing, you know, it potentially will probably bounce around like 74, 7,500, but I'm more or less looking at this particular block right here. Okay, the block is between $7,200 and about 6,600. Somewhere in this region is where I would expect price to bounce if it just slices on through. Okay, and I personally don't think that this whole, you know, sideways movement is going to last too long. I want to say maybe like, you know, a few more days at max. It's really hard to define time in terms of, you know, trading ranges, but this is already getting worn out. Okay, kind of like, you know, this whole thing that happened right here is the same thing that's happening right here. And I want to show you something that's interesting is, you know, from this point right here to this point, okay, till we broke past the high, that's 31 days. Okay, so if we define that over here, right, 31 days for us comes out to 24th of October. That's tomorrow. Okay. So I'm not saying that it has to happen tomorrow. I'm saying that, this accumulation or, reaccumulation before a, uprise right here is the same thing that's kind of happening in that same region right there, right? A good month-long accumulation, push up, month-long distribution, push down. It's very possible, okay? And then other than that, if we do break past that, like I said, way down here is my real final stop. If we kind of bounce around 5,000, 5,200, if we don't bounce on that and really just start taking off, more than likely we're probably going to go back to the December lows of $3,100. Okay. I mean, I really don't want that to happen because it's just going to be a longer bear market. I personally think that the bear market should resolve itself by December, by January of 2020. I really don't think it's going to take that much longer because there's a lot of selling already happening here. And more than likely, once this much amount of selling is going on right here in distribution, the slice through is going to be a lot easier. And all the retailers are going to get their hands cut off trying to buy this. And then this thing will again reaccumulate for another month or two or something and then push back up. Those are, personally my thoughts. Okay. Let's see. People like to define this parallel channel in many different ways. I saw someone doing it like this, or I don't know how it was, something like that. I think it was something like that. Something like that right there. I don't really like that. I know that's kind of hard to see. Let me see if I could draw that a different color or something. Yeah, you know what? I'm gonna get rid of that because I really don't like it. Or actually, you know what? Going back and forth too much. I might as well just do it. Okay, so you know what? I'm gonna do it like this. I'm gonna do it like that. Kind of like that. Okay. Just want to draw it in an ugly color so you guys could see. This was the parallel channel that they were defining, right? Now, if you already saw that, you could see touch at the top, bottom, bottom, again bottom, hits the top, bottom, comes back around, bottom, right? So you could see that price is already struggling to even get above the EQ of this channel right here, So I don't really know how you can define this as a good parallel channel. This is not a, parallel channel that gives me any hope. I mean, honestly, it takes any bit of hope away because it tells me that price loves to gravitate near the bottom of the channel, which makes things even worse because you can't just sit on support and not expect to crack it, right? So, in this particular situation, I really don't know how to look at this other than this thing is probably going to break soon. Whether you want to look at it as this green parallel channel or the parallel channel that I've drawn, or even this ascending trend line, Let's see. I had drawn my wave count somewhere. I mean, I do think that there's like a wave count to be drawn, maybe like, let's see if we count that. I'd probably say like, actually, if this is C, it's probably something like this. 1, 2, this is probably 3, 4, and then the 5 is looking for that stretch, right? The 5 is trying to come down here into that block that I told you all about. By the way, this 4 is over here. 1 is over here, 2, 3, 4, and then 5 is looking to come down to this block. That's kind of how I'm looking at this, okay? If we're doing that, corrective count. All right. Let's see. Now, so I talked about, breaking down into the 7K levels soon. I really don't think there's that much time left. I mean, the bulls really have to prove themselves soon. Yeah, I think that's it. All right. Well, thank you guys so much for watching. I want to make sure I don't have anything else to talk about. Let me see. Link is doing decent. Still not anything super special. Let's see over here. Oh yeah, so based on this bottom to this top right here, we've retraced almost 78.6% of the way. Okay, not a good sign if you are a bull. You typically want to bounce off of the 382 fib or at the most, 618 fib. This thing is already struggling, so not the best sign. All right. Oh yeah, there's actually another trend line. I've been watching this trend line. There it is. Okay. So that trend line actually comes over here from this way top over here at 12.2, second touch right there 10.9, third touch right there around 10.3. So if we sort of stretch this trend line down a little bit, right? If we go straight up today, right, we should hit 9,075 or so. Okay, if we go straight up today, or $9,100, let's just say. That would imply that we basically slice through everything, all the resistance, all the shorts, everything up here. Which, again, I don't really know how people are still bullish, because it's clearly evident, at least for me, that price is really just looking to create these lower highs, and the bears are really pressuring the market down. Though I guess you can make the argument that the bears are also making not as big of a case, or rather the bulls are making a case that these are higher lows and another higher low. Okay, but these higher lows are only sustainable for so long, until you have to actually prove yourself and create a higher high, which the bulls haven't really done yet, right? So it's hard for me to say that this is bullish, because on the other side, you have the case for this, kind of like that. So you can make the argument that all that's really happening is sort of a tightening, wedge or symmetrical triangle, like right here. This is coiling up really tightly. And when prices coil up after the selling has happened already and the momentum is down, the coiling gets tighter and tighter, and this thing will lead to continuation to the downside. Symmetrical triangles are a continuation pattern. They're not bullish, okay? So, and you can see that in the volume too. Volume is really just tightening up, right? You can see the volume overall just going down and down and down. Eventually it's just going to coil up so much that there's just going to be an expansion in volume, and that expansion volume might be the sell side volume right here, kind of like this. Okay. All right. I think that wraps it up, folks. I wanted to have a quick analysis, but this one went a little bit longer. Please do give me a thumbs up if you enjoy my content. And again, join the Cryptosomniac community, folks. Tons of really great information, an awesome community where you can share your thoughts, your analysis, learn something and ask questions and meet people from different parts of the world with different insight. Okay. So I hope you guys come join. And again, you can see, people in our community are fairly active, whether day or night. And day or night, I still put up my video analysis twice a day, analysis through the day, answer questions through the day. So yeah, hope you guys come join. Oh yeah, last thing, here's another thing that I find really funny. 83% of clients are net long. I think I found this on Twitter from someone. This is really funny to me, because you know that if people are long still over here in this bearish pattern, that's perfect. That's exactly what you need. You need, buyers to, buy into this selling right here. And then once the buyers are gone, then this thing tanks. Okay. So just like that range I told you earlier, that was defined up here. Same thing right here. Okay. This sort of irrational exuberance that people have for being net long in Bitcoin is not smart. They're going to get their hands cut off. Okay. All right, folks. Again, thank you so much for watching. Cryptosomniac, give me a thumbs up, and I'll see y'all soon. Cheers.